You're live.
Okay. I'm waiting for the.
Jeff, I don't think you understand me. You're live right now.
Yes, I needed to start the broadcast for GoToWebinar, so I just did that. I want to say welcome, everybody. Thank you for coming. I hope you're doing well, enjoying a little bit of extra fear with your markets this week. My name's Jeff Gibby. Did you want to introduce me today, Greg? I was interested to see how you wanted to do that.
Yeah. I'm just going to keep the camera on you.
Okay.
And say,
I'll smile.
Let's see now. Let me think about this. I got to switch my mic over because it's in my head. All right. So Jeff Gibby, been with the company for, let me guess, don't tell me, 18 years, 20 years, 45 years. 24 years.
Plus.
He's currently our director of sales and also business development. He's probably, I'm going to call it right now, our most popular speaker. Don't tell his boss. And certainly one of the most prolific speakers we have. He performs, presents live and on video all over the world a lot. And so if you've been with us at all, you probably already know Jeff Gibby. Anyway, he's a fabulous human being in addition to being a very expert and professional trader. And not a professional trader, professional on MetaStock. So is that good enough, Jeff?
Sounds good.
I'm going to have to write that one down for next time. Yeah, you got me a little on the spot.
All right, good. Let's start with our legal disclaimer, shall we?
Shall we?
Today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. So, with that said, I hope you're doing well today. I hope you're either short or just waiting for a good buying opportunity right now because this market's falling apart pretty rapidly. And it's going to create some pretty good opportunities. So today we're going to talk primarily about MetaStock. If you have some symbols you want to look at, go ahead and type them in. I'd like to see them. We'll be looking at them in just a few minutes. To give you a little bit of background on MetaStock, just in case you're not familiar with the company, we're right here located in Salt Lake City, Utah. We were started back in 1982 by a gentleman by the name of Steve Akalis. I started back in 1997. We had been known by Reuters for about 2 years then. If you're not familiar with Reuters, they're a huge company, very, very big company. We actually bought ourselves back from them about 7 or 8 years ago, and we still kept a good relationship with Reuters, who was also Thomson Reuters, which is Refinitiv, which is pretty good because it's actually been something that allows us to power our data with our software, with data from pretty much anywhere in the world. There's about 300,000 markets that are covered. You can just get just about anything that you want. And it's been a pretty good separation because in the time that we've been not part of MetaStock, we've released like our forecaster, our options windows, our quote center. We've been able to really put a lot of more resources into kind of developing the software out. But at the same time, we've been able to kind of use the relationship we have with Refinitiv to provide some of the best news of fundamental and financial data that's just available anywhere in the world. And I literally mean it. I mean, with Refinitiv, they spent about $1 billion designing the news platform that we white label. They have 3,000 full-time reporters across about 300 different news bureaus that feed data into it. And it's the same type of information that you subscribe to if you're like a bank and an institution. So that's pretty cool. Of course, we've been always focused on our MetaStock software program, and we're going to kind of talk a lot about it today. It's been rated #1 in its price category for about 26 years in a row. And a lot of the things that make it so popular is really what I'm going to cover today. the ability to do testing, trading ideas and see what works, the ability to get a good idea of what to do with a specific methodology at any given time using our expert advisor. Our patented forecast system, we actually won't cover that today, but it's a very, very big part of the program. The ability to scan through all the optionable stocks or all of the instruments that you're interested in. So there's a lot that actually goes in the software. We're going to cover quite a bit of that today. And but the one thing that I do like to brag about, because I think it's important, 26 years in a row, it's been rated #1 in its price category by the readers. Not the editors, not the people that kind of book the marketing, nothing like that. The readers of stocks and commodities. So let's go ahead and get going today. We'll probably go for about an hour. Here's what I plan on talking about. The importance of having a trading strategy. I think it's important that you have a trading methodology or a trading strategy. That way when news hits the thing, you have an idea and an exit plan in advance of that. To help you understand a trading methodology, I'm going to actually teach you about MACD and how that works. And then I'll show you how to test different trading ideas using the software and find opportunities in the software. So that's what we're going to cover today. So to talk a little bit about a trading discipline and why I think trading discipline is important. I have a quote in here from Richard Dennis. And you might not be familiar with Richard Dennis, but he was one of the turtle traders. He, along with his business partner, Bill Eckhart, I had to think about that for a second, were famous traders back in the 70s, 80s, and they had a bit of a disagreement. One of them believed that they could teach anybody to do what they're doing, teach anybody to trade the futures market. They could give them a trading methodology, they could give them strategies, and that they could train basically a monkey to do what they're doing. The other one, and I believe it was Bill Eckhart, disagreed. He said, well, no, this is very genetic. There's really you have to be able to, it's not something that you can easily teach somebody. And so what they had was a pretty good foundation for a gentleman's agreement or a gentleman's bet. And so the result of that is they ended up pooling some money together. They ended up funding about how, I don't want to give the number because I don't remember it, but they ended up putting ads in stock in IBD, Barron's, and a few publications, and they recruited a group of, I want to say, about a dozen traders. And what they ended up doing is they brought them in, they taught them very specific trading rules. If this happens, you should buy. If this happens, you should sell. And there's a method in MetaStock called the turtle trading, which is kind of built around what they would teach their traders to do. And it wasn't a methodology that was successful. It was insanely successful. I believe, and I'd had to consult the Wikipedia article, which I didn't do today, but I believe within the first year they were up over 100%. In terms of their activity. And one of the things that Richard Dennis said, there was a couple of things. One of them said it was unbelievably easy. The experiment was way more successful than it ever was. And then, of course, the other quote that he had was the one you see on your screen. I always say you could publish my rules in the newspaper and nobody would follow them. The key is consistency the key in trading is consistency and discipline. Greg, I'm going to bring you in here a little bit.
Yes.
Have you been asked this question before? Do you know what the best profession for trading is?
Well, without divulging too much company information, our surveys over the years have always shown engineers, and a lot.
Oh, well, that's definitely a lot of the customers that we look at for.
Yeah.
That wasn't the answer I was looking for. No.
Oh, ask me the question again. I'll get it right this time, I promise.
Okay. Say Airline Pilot.
Is it Airline Pilot?
It is Airline Pilot.
Right.
In fact, Greg Morris was in Airline Pilot. Chuck Hughes was...
Greg who?
Greg Morris.
I never heard of him.
Okay. Greg Morris, he developed one of our... a partner of ours actually developed JCPR, one of our add-ons. Managed $19 billion for a company called Stadium Money Management before he retired a couple of years ago. Actually was an airline pilot. Another person we work with is Chuck Hughes.
Chuck Hughes.
Yeah, thank you.
And I've heard of Greg Morris.
I know.
He's a good friend.
He also was an airline pilot. But I've also often thought about why is the case that an airline pilot is the best profession or one of the best professions to go into when you're trading. And when I'm doing this in a live event where I have people, I actually make them answer the questions. I make them kind of guess. Since Greg really flubbed the first question, I'm not going to ask him why.
Really bad.
That is. But from a perspective of what I think it is like if you're an airline pilot, one of the things you have is discipline. So, for example, when you're taking off, you have a very specific checklist. You're going to go ahead and get in your cockpit. You're going to go ahead and follow your takeoff procedure, and you're going to follow it to the letter. When you land, you're going to follow another landing procedure, right? If there's an emergency and you have to follow an emergency protocol, you're going to be very disciplined about what you're doing. And that's why I believe that airline pilot is one of the best professions to go in. We've also worked with quite a few psychologists. As a matter of fact, Jake Bernstein is somebody that we work with. Alexander Elder used to be a psychologist. A couple of people that I really respect in the market actually are psychologists. But for the purpose of the answer I was looking for, Greg, airline pilot.
Well, and to be sure, the answer I gave you was when we've done surveys in the past about who's buying MetaStock. It's been the engineer and that sort of ilk, which makes sense because technical analysts are generally analysts and technical.
And MetaStock's a very, very good engineer toy with the ability to build indicators and that kind of stuff too. So I'm not seeing a lot of questions in here, but we do have a pretty good group. So if you do have questions, let me know. So I figure the best way to kind of start this is the MACD strategy. I like to kind of give you an idea of how a trading methodology works. The reason I like to do MACD is it's a very popular indicator, and it's a trend and it's a momentum indicator. I'll talk a little bit more about that. As you know, the trends your friend until they bend in the end, and all those kind of things. But let's kind of focus on a little bit about what the MACD indicator is. The MACD indicator is an indicator that was developed by a gentleman by the name of Gerald Appel. His picture's on your screen. And let's talk a little bit about what that is and how it measures both trend and momentum to kind of give you good trading signals. So, and why it's so popular. So I'm going to go ahead and we're going to go ahead and get a little bit out of PowerPoint right now. I've got a beautiful chart on a weekly basis of the Dow Industrial falling apart here at the very end. I'm going to go ahead and switch this down to a daily chart, and I'm just going to kind of clean it up a little bit, and we're going to go ahead and talk a little bit about MACD here. So I'm going to go ahead and go down to daily basis. We're going to see a closer look of the wreckage that is the market this week. I'm going to go ahead and close this down, going to close this down, and I'm going to actually throw a couple of indicators on this chart. So let's go ahead and start with a couple of the MACD. So I'm going to go ahead and throw the MACD on here. The way you do that, if you're not familiar with MetaStock, is right here, there's a bit of what we call an indicator quick list. And if I click into it, there's going to be several hundred indicators in here. So I can kind of come down here. You'll notice there's all kinds of stuff around commitment of traders. There's all kinds. Any indicator you could probably think of is already in the software. And if there's one that we missed, you can actually easily add it to the software. It's all alphabetical. It's fairly easy to find the indicators that you're wanting. And of course, the indicator that I actually want is MACD. One of the things that we recently added to MetaStock, and I think this was like version 15, was any of the indicators you use frequently are going to be stored in this most recently used list. So no longer do I have to kind of go through and kind of find the MACD when I'm showing you this. It's always at the top of the list because it's one that I show quite a bit when I'm doing classes. To add this indicator to a chart, what I'm going to do is I'm going to drag and drop. And basically, so right now I'm holding down the mouse button. And what I'm going to do is wherever I drop this is where it's going to appear on my chart. So if I dropped it right here, I'd have a MACD that would overlay above the chart. I could drop it down here at the bottom of the chart. I could drop it up at the top of the chart. Wherever I drop this is where it's going to go. I want you to notice right now, I'm going to point at my screen, but underneath the cursor, if I'm pointing at the very top, there's a little window, and that's just kind of a visual signal that if I drop this indicator here, MetaStock's automatically going to open a new window for me. So I'm going to go ahead and do that. You'll also notice before I let it go that right now, the color of the actual chart has changed from a black color to a pink color, that just gives me a visual indication that when I drop this MACD, it's going to be calculated on the price of the chart. So let's go ahead and drop it. Again, I'm going to drop it right here on the top, and we'll go ahead and let it go. Okay, and we'll go ahead and I'm going to leave it right now as the default settings, and we'll go ahead and kind of move this up as well. And I do want to make a little bit of some structural changes to this chart. One of the things I like about MetaStock is anytime you want to make a change, it's fairly easy to do. For example, I want to make a change to the color of this MACD. I want to make it a little thicker so you can see it a little bit better. Anytime you want to change anything that exists on the chart already, I just double click on it. In the case of MACD properties, in the case of the MACD, when I double click on that, it's going to give me the MACD properties dialog box. I'm going to come over here to where it says color and style. I'm going to make this a blue indicator, and I'm going to make it a bit thicker. I'm going to make it a histogram first of all, and I'm going to make it a little bit thicker. While I'm in here, I'm going to also change just the style of the moving average to be a bit of a solid line. So I'll go ahead and click on OK, and you'll notice that you can see it a little bit better because I made it a little bit thicker, and we'll talk a little bit about how this line is calculated right now. Okay, one of the things that I'm going to do is, in order to kind of talk to you about how it's calculated, I'm going to add two moving averages to the chart. So when Gerald Appel created the MACD, he used two moving averages to figure that out. And if you actually kind of look at kind of the way he did it, he used like a 0.75 and a 0.56 exponential moving average. I don't even know what that means, but they do correlate pretty well to a 12 and a 26 exponential average. So I'm going to go ahead and add those to the chart. I'll just go back into this indicator quick list. I'm going to drag down the 12 here, okay? And I'm going to make this a 12. Again, I'm going to make it an exponential. And while I'm in here, I'm just going to make it a little bit thick already, okay? I'll go ahead and click on OK, and then I've got a red line on here, okay? I'm going to do the same thing, but instead of doing a 12, I'm going to do a 26 period exponential. I'm going to make it blue. I'm going to make it a little bit thicker while I'm in here. Again, if you can set this up the way you want to see it, I'll go ahead and click on OK. And now I've got basically the two indicators on the chart that I want to show you, the one that I want to talk about. If I was going to calculate a MACD, basically the way that you would do this, let me just check this number again. I believe it's, 12 and 26. Okay. If I wanted to calculate a MACD, basically what all this blue line is the difference between two moving averages, a shorter term moving average and a longer term moving average. So when we're in a market that's moving upward, your shorter term moving average is going to be above your longer term moving average, and you're going to have a positive blue line here. Okay, so the blue line is all we're talking about. We'll talk about the red line in just a minute, but the only thing that you're looking at is the difference between this shorter term and this longer term moving average. Okay, if we're moving up significantly, like we are kind of up into the months leading up to this disaster that we've recently had in the marketplace, if we're moving up significantly, you're going to have a fairly good, solid difference between that shorter term moving average and that longer term moving average, which is why you're going to have a bigger MACD. This is how it measures momentum. If you're if it's not moving, you'll see right here in this area of the chart in October, we didn't have a lot of movement in the MACD. You'll see that the MACD is still giving you values, but it's very, very flat. In other words, we don't have a lot of momentum. This is how you look at momentum on a chart. If hypothetically the market starts to fall apart on Friday, you lose a couple thousand points here, a couple thousand points there, you have a big separation between your moving averages, and you're seeing this really, really steep decline in the MACD. That's just basically what's happening in the market. So to kind of sum up just the blue line for right now, what we're looking at is the difference between two moving averages. That's it. And what we're looking at that is, do we have, if it's going up, we have a positive trend up. If it's going down, we have a negative trend. And that's kind of one of the way you look at trend. The way you look at momentum is the larger that number is, the bigger the trend is. So hopefully that's clear. Maybe you learned something. If you have questions, let me know. Hello, Vincenzo. Good to see you on the YouTube. Hello, Anton. I know I said hello earlier. Welcome today. Okay. Let's talk a little bit about the red line on here. This is called the signal line for the MACD. And if I double click on it, you're going to see it's just a 9-period exponential moving average of the MACD. So basically, all we're looking at is 3 moving averages with the MACD. We're looking at the difference between 2 moving averages, and the signal line is a moving average 9-period exponential of that difference. Okay, so that's what we have here. You call it a signal line because that's how you kind of gauge whether a security is bullish or bearish based on a MACD. And to kind of visualize this, what I'm going to do is I'm going to open up a tool that we call the Expert Advisor in MetaStock, and I'm going to kind of, as we go through it, I'm going to kind of allow it to kind of help me explain what I mean. So I'm going to go ahead and click on the Expert Advisor. We have quite a number of different what we call expert advisors in MetaStock. And for the most part, they're mechanical trading systems. They're designed to help you understand different things about the market. And that'll become very much more apparent when I find the one on this list that's called MACD. So let me go ahead and go down here. We're going to go to the MACD one. This one's called MACD by MetaStock. I'm going to go ahead and attach it to the chart. I'm going to go ahead and click on close. Okay, and we're going to go ahead and zoom in on the chart right now. Okay, what I'm going to do is I'm going to kind of draw your attention to the MACD and its signal line. So right here, the MACD was trading down below its signal line. On this day, it went up above its signal line. That's basically what you would call a MACD buy signal. Okay, in that particular way, the way you can look at that is if a MACD is trading above its signal line, then it's going to be in a bullish phase. And if you look on the chart, when I have that expert advisor attached, it's actually going to say bullish right here. When a MACD is trading down below its signal line, as it has been since right here on the chart, then you're going to say this is a bearish phase. Okay, so basically what we expect when the MACD goes down below its signal line is we expect that the stock will be bearish. We expect that means that the stock will go down because by definition that's what it means. And so that's our signal by the MACD to go ahead and start to get short in the market. Okay. Conversely, when the MACD is up above zero, or up above, sorry, not zero, but its signal line, you're going to say the MACD is bullish and you'd be looking for the stock to go up. Okay. That's one way you look at the MACD. There's a couple more, and I'm going to talk about those as well. But that's kind of the main way that you can kind of get buy and sell signals. Okay. The other way that you can look at MACD is as a momentum indicator, like I was talking about a bit before. With a momentum indicator, obviously, like there's a bit of a revision to the mean strategy. Okay. If something starts to fall apart very, very quickly, eventually we hope at least that some buyers are going to come in, right? We're not going to get to a situation in this market where people are paying us to get the Dow. Eventually people will value buyers will come in and buy. And so the way that you kind of read it as a momentum indicator is when the MACD gets very, very extended, you can use that as an idea that, okay, well, we're starting to get extended. If I'm in a position, I should maybe move a stop up. The other thing that you could look to do is to kind of reverse a position, but you should never use it by itself because a trend can extend indefinitely in a certain direction to the bullish side and down to zero on the bearish side. You can look at MACD as a way to measure momentum, but it should never be your particularly the only reason that you're buying something. In other words, and you'll hear it every webinar you probably go to this week, you'll never want to catch the falling knife. If we're looking at just kind of trying to buy the bottom on this, well, where is that going to come in? If that's $1 million question, right? We don't want to actually try and find the bottom. We want to find where the support is going to be located on this chart. So, in that particular case. The third way that you can look at MACD is, and Alexander Elder calls this the most powerful tool in all of technical analysis, but he calls it the MACD divergence. Okay. And the way that we could measure MACD divergence is we can look at two peaks of MACD. So if I come down here a little bit, right here, I'm going to go ahead and grab my horizontal or my trend line on MetaStock. Okay, and what I'm going to do is I'm going to look for a spot where we went down below 0 and came back up, which the last time that actually happened was right here. Okay, not including here. Okay, right now we're obviously down below 0. Right here is where we kind of went down below 0. If I drew a line from the peak over here to the peak over here, you'd see that we have a bit of a trend line that's going up. Okay, if I took that same area, okay, and looked at pricing, right here we've got a high, here we've got a high, okay, they kind of correspond. You'll notice that these trend lines are both heading up, okay. That's what you want to see in a bullish market. In fact, this bullish market continued to extend to the north. This is not what you call a divergence, okay. If we came in here and we drew these same lines, but we saw kind of a MACD divergence where MACD was making new highs, but the price wasn't. That would be what we call a MACD divergence. That would be breaking the bear of what Alexander calls breaking the backs of the bulls, and that's one of Alexander's key signs that the market is getting ready to turn around. Okay, now hopefully that helps you. Hopefully that kind of helps you. But to sum up, there's three ways you can look at the MACD. You can use a signal line, okay, which is why we're getting the buy and sell signals here on the chart. You can use momentum, and you can use divergence, okay? And in MetaStock, with this particular expert advisor, we have a commentary that kind of keeps track of all three of those things for you. So I'm going to show you how that works. I'm going to go ahead and open up our expert advisor. I'm going to go to the commentary here. And when I open up the commentary, you'll notice that a bit of an arrow forms on the chart right here, okay? And it's just going to help me understand what's going on with MACD. In the case of MACD, there's some really good experts in here. There's one that'll explain candlestick patterns for you and identify them on a chart. But this one is the one that matches the MACD. Right now, what it's saying is the MACD can provide buy-sell signals in three different ways. The signal line crossover, okay, the overbought oversold condition, and the divergence, okay. Right now the MACD is bearish since it's trading below its signal line. The MACD crossed below its signal line 4 days ago, right here. It's amazing how much ground we've really covered in 4 days. I will tell you this is unusual, okay. Since it crossed its moving average, the Dow Industrial Average has decreased 12%, okay, and has ranged from a high of 291 to 257.39, okay. The MACD is not extended enough. This line isn't big enough yet to be in an overbought oversold range, and there have been no divergence signals that is found within the last 5 bars. So all three of those things, it's actually going to keep track of us for us. If it sees a divergence signal, it'll actually paint it on the chart. If it sees that MACD is starting to get overextended, it's going to point that out on the chart as well, right here. Okay. It'll also start to highlight the bars on the chart as well. Okay. So that's kind of how a technical system works. How are we doing? 2:30. Okay, good. I was just kind of getting an idea of how sometimes I go really slow. It seems like I'm going just about right today. That's kind of how, I think that's a pretty good coverage of how a technical trading methodology, like the ones you'll find in MetaStock work, okay? You'll notice that it's completely objective, okay? What we're looking at in terms of this is we're looking at the trend of the stock. Some will look at momentum, some will look at volume, but we're looking to make decisions. And there's a couple reasons I really, really like technical analysis. Number one, it's objective. We can come in here, and as long as we understand what the rules are, we can we can see exactly where we're going to buy and sell. It's 100% objective. We're not trying to guess what's going on. You know, I always used to talk about QE1 or QE2 or the tweets or the coronavirus now, right? We're not trying to guess. What we're looking at is the trend. And by at least in particular with this trend, we would have been able to go short way before the same day that it actually started to fall apart on us. Okay, Friday. Okay. The other thing I like about it is completely objective, it's also completely testable. Because this is something that's created based on complete logic. We're not making guesses. We're not armchair quarterbacking. We can go in and see how this is historically compared. Okay. One of the questions I'd get all the time, I worked in inside sales. I worked in inside sales for about a decade. And for about the first couple of years, I loved, and I still do, love talking about MetaStock. People would call up. I'd go in, I'd start talking about all of the things that are available in MetaStock, because we've been working on MetaStock now for like 30 plus years. And it's really easy to start talking to a customer and talk about the 200-300 indicators in MetaStock, the 40 or 50 trading methodologies, the ability of MetaStock to go in and give you kind of these expert signals. And it's also very easy to get people a little bit frightened of the program, because it is a huge and powerful toolbox. And it is. There's no question about it. But one of the things that I think that's helpful with the MetaStock program is, because everything is objective, I can actually go in and I can say, okay, well, if we would have sold Dow at 290 and we would have shorted it, and right now it's dropped 12%, would that have been good? Absolutely, right? If we would have bought it here at, let's say, where is that? 293, and we would have sold it at 293, would that be good? Well, it's all right. It's not that great. If we would have bought it here, but since this is objective, I know where my buy and sell signals are. I can test it. I can tell you exactly how well it would have worked, or how well it would have compared to some other indicators. And I can actually use testing. And we do have a system tester built into MetaStock that I'm going to show you to determine, the best strategy to kind of use based on the instruments that I want to trade. So, does that make sense? Paul Raskin says was there a MACD divergence from Jan 27 to Feb 12? Let's take a look at that. I actually I saw what might look like a divergence, but it broke one of the rules that I didn't like. So let's take a look at that, though, because it looks like it's a close one. If we look right here, I almost pointed this out, but it violated one rule. If we look at this peak to this peak, right? Okay, you have a higher high than over here. Okay, right here, if you look from this peak to this peak, this is going up, this is going down. You're breaking the back of the balls, which is like what Alexander likes to talk about. The reason this doesn't fit, at least Alex's definition, is he likes to see the MACD go down below zero, which it didn't do. So I didn't call this out. It's certainly very, very close to what you would call a MACD divergence right here. This is going up. This is definitely going down. It's definitely a bad sign for the market, but since it didn't cross down below zero, it didn't fit Alex's or Dr. Elder's perfect definition of a divergence. But that's plain as day divergence if you ignore just that cross below zero. So I didn't want to talk a little bit about that. He does like to see it go down below zero, but that is divergence right there. That's exactly the kind of the pattern you're looking for. Now, this is a fairly dramatic down move, but that's a divergence. Absolutely. Okay. I'll go ahead and delete that. Thank you for pointing that out too, Paul. Where was I, though? All right. Okay. Yeah, we were talking about how easy it is to get confused, how it's important to kind of go in and be able to see what works well in different marketplaces, how you can test different trading ideas. So let's go ahead and I'm going to open up what we call the Power Console in MetaStock. We'll talk about some of the tools right here while we're looking at it. Obviously, chart is what you open up to look at a chart. Okay. Quote Center is a brand new tool. It allows us to look at quote lists. It's very cool. Scanner we'll be talking a little bit about today. System Tester we're going to cover in a lot of detail. Scanner we'll be talking about it. It's great. It allows you to go in and test or scan all the optional stocks or all the NYSE stocks or whatever you want, and find the stocks that have an opportunity to buy or sell today. So we will come back to that. There's a system tester. We're going to play with that right now. There's the forecaster. We won't talk too much about that, but there are some videos online on our YouTube channel, youtube.com/metastock, that kind of talk about our patented forecaster tool. And then Option Scope is another brand new tool that allows you to go look at option pricing. So let's talk a little bit about system testers. Okay. What I've done in here is I want to kind of show you how to do a system test. So I'm going in here and using another feature we've had it within the last couple of years, I've went and made a list of all of the systems that are included in MetaStock. Okay. I've tried to exclude anything that uses optimization because it takes a little bit longer to test, and just built a list of the 54 non-optimized systems that come packed into the software. Okay. You'll notice in MetaStock, this is a demo machine in MetaStock, has about 150 systems built in. 54 of those are the ones I selected because I know they come into the platform for you. Now, what do I want to do with the system tester? What I want to do is, we just spent 37 minutes learning about MACD, right? Is it a good indicator to use? Yeah, it was probably pretty good in the Dow Industrial Average. But there's 200 different indicators you could use. There's about 54 different systems built around indicators that we can use to kind of test and see what the best one is. Because a lot of times I would start talking to customers and they'd be like, oh, okay, do I have to learn 200 different indicators? For me personally, what I'd like to be able to do is figure out what works, okay? If I can understand that MACD works, I'm more than happy to spend 30 minutes learning about it. But I'm not going to spend 30 minutes learning about 200 different indicators if there's a whole bunch of them that just don't work, or I'm going to find better performing indicators in the market. So we're going to go ahead and run a test to see what's worked well over the past X amount of time frames. And probably I'll just do a year just to see what works out there. Okay. I'm going to take all of the 54 methods that are built into MetaStock, and if I wanted to, I could test like all of the optional stocks. I could test the S&P 500. I could test any list that I want, really. Could test futures markets. To kind of keep things going fairly quick, what I'm going to probably do is type in a couple of symbols here. And if you guys have symbols that you'd like me to add, type them in. I'll add them to the system test that we're about to run. But since we started on DIA, I'm going to add DIA. Other stocks that have been very, very popular are Tesla. Okay, Apple has been extremely popular, Microsoft, and then SPCE. Okay, and then see if you guys got a chance to get any symbols in. I don't see any added. So right now we've got 1, 2, 3, 4, 5. That's enough. And I'm going to take all 5 of those stocks. I'm going to take each of them and test them against 54 different methodologies. I'm going to go back. I'm going to take all the long short trades, all the short trades, so both long and short trades. I'm going to go back 500 days, which is about 2 years on a chart. We're going to do that on a daily basis. We're going to have it test. Okay, how's it going to test? Okay, Paul, let's add GLD for you. GLD. I'm just going to do a little bit of and JNUG. Okay. Obviously, a gold trader. I think JNUG is, okay, .k. I wanted to get that .k. Okay, all right. I'm so bad. I'm so bad at going back to the task I was working on today. All right, so how's it going to test it? Let's go ahead and click on the trade options. What I'm going to do in my system test is I'm going to have it go, and we're going to start with a trading account. Looks like this is set to go with $100,000. I'm going to set it to $10,000, and this is going to be my hypothetical trading account. Okay. How is it going to trade when it gets a signal? Well, I could have it trade 20 number of units, 20 shares at a time. I could have it trade based on a transaction cost. I could say, go ahead and spend $2,000 every time you get a trade. Buy $2,000 worth of shares. The software will go figure that out. And whether it has the money or not, it'll trade $2,000. Okay. The other option that is available is the percent of available equity. So I'm going to go ahead and set it at 75% of the available equity for the thing. That means the first time I take a trade, I'm going to trade 75% of my account, which means my first trade, I was going to almost make Greg answer this math, but my first trade is going to be $7,500. So there you go. In broker, almost nobody's paying commission anymore. You can put commissions in here. You can put interest rates and margin requirements in there. I'm going to leave this on realistic market prices. Realistic market prices basically waits until the day after the signal, or the bar after the signal. We're working with days on this test, and buys on the following open. Okay, the idea is, like if we're looking at that MACD example, we don't know when that sell came in. We had that perfect sell that was right. Can I move this over? Okay, we'll go ahead and click OK right now. I can move this over. We had this signal that came in perfectly timed on the Friday, right before everything fell apart, right before it gapped down. But do we know when that signal came in? Okay, did it come in the middle of the day? Did it come in at the end of the day? Did it come in and just go away, which could have came in yesterday, but the stock moved up? So what the realistic prices does is it'll wait till this bar is closed. Since this bar is closed, it'll buy at the open of the next bar. Okay, we call that realistic. If you want to, you can actually have it buy on the close. So you'd be buying on the close. You can even have it buy on the high, or buy on the low and sell on the high, but that's not realistic. You want to keep it kind of realistic. In this case, we're going to leave it at what we call realistic market prices, which will wait till this bar is closed and then buy on the beginning of this bar. Okay? Make sense? Okay. So now we're going to do all these system tests. We're going to go ahead and start it. Okay? And we're going to get an idea of what's worked well over the last couple of years. Okay? We've had a dramatic pullback. We've had a really good bull market for the last couple of years, and then now we have a little bit of a pullback to test as well. So the other thing I was kind of say, you'll notice it's kind of cruising through this. It's on about 298 out of 378. I'm going to go ahead and kind of skip this alert. There is an expert advisor feature that's triggering this alert, which I could have emailed to me, but I'm going to go ahead and just kind of remove it real quick. Let me go ahead and click on view right here. Okay. And this is kind of the way that this looks. Okay. Let's go through exactly what this is. So right now, if you remember from just a few minutes ago, we tested about 7-8 symbols against those 54 methods. Okay, we went back 2 years, and since we did more than one, it's going to give us average performance across that data set. So I'm going to go ahead and make this full screen, but you'll notice, I wonder if I can make these text a little bit bigger. I can't, but you'll notice that everything that we're talking about here is average net profit, average percent gain, best profit, worst profit, average number. Most of these systems have actually performed really pretty well, above zero. I'm going to rank them based on their average net profit. As a trader, again, what I want to do is I want to identify the systems that work best, right? And then I also want to be able to identify which methods which stocks they work best on, okay? So if I sort them based on the average percent profit, what I'd probably be doing is actually paying attention to these systems over here that have performed the best over the last 2 years, okay? Right here, stochastic RSI is our best performing system, okay? If we're looking at it, we had about a 58% gain on average, so that taking every single trade off of all of those stocks, we would have traded on average 58%. We would have been up 58%, okay? Our best profit was 27,000, and our worst, is that 1,000? Yeah, 27,376. Our worst performing system in that bunch was about $675. We traded 38 times on average with a win-loss ratio of 24 wins to 14.1 losers. An average profit to average loss. So every time we lost $1, on the other side, on a winning trade, we made $1.38. Okay, so you get an idea here. There are a couple things that I look for when I'm doing a system test that are very personal to the way I want to trade. So for example, if you ask my wife, I work way too much. What? Yeah. The crazy woman wants to have more time with me. I don't get it. But when I do go home, I do have, depending on the day, 2 to 4 kids. Feels like maybe a couple hundred some days. But I don't have a lot of time that I want to trade, and I don't particularly want to trade that often. Your situation might be different. You might be retired. You might want to trade a lot. For me personally, I'd rather trade less as long as I can make more money. So here in Utah, we have 12 months in the year, 38 trades. That's generally going to be about 3 trades a month, which is a little bit too frequent for me. I'd kind of look down and maybe even look at kind of maybe this bull power, bear power 1 system, which traded about, well, actually, that was way more, 64. So I'd be working harder to make less money. So let's go back up here a little bit. This Bollinger Bands Expert system traded about 2 times a year. That's a little bit infrequent for me, but it's 2 trades. Win-loss ratio is 1.9 to 0.7. So it's actually doing pretty good. What I probably want to do is find something that's a little bit less frequent than 38, okay? Because that's 38 trades per stock, okay? But let's go ahead and take a look. I'm going to go ahead and we'll just for the purposes of moving this along and looking at the time, and now I am going too slow. I'm going to go ahead and click on View right here, okay? And so here are the stocks. We tested 7 stocks. And here's how they performed individually. And then again, I'm going to sort this by performance, okay? So our worst performer is actually the Dow Industrial Average. So there's that. Our second worst was Apple, and that actually is the only one that in this basket lost money. It lost about 6%, okay? Again, if I would have tested like 4,000 stocks, I'd be looking at 4,000 green red lines here, okay? And I think that's one of the powerful things about MetaStock. I can actually go in and perform a system test and know how well it's gonna perform by running one test against a broad array of markets, okay? I can also tell you that it performed best against JNUG, Tesla, and Microsoft, and maybe those are the ones that I want to focus on. But JNUG actually worked really, really well last year. It had over the last 2 years, it had a 273% gain on about 45 trades. The win-loss ratio on this was 35 wins, 10 losses. That looks actually really, really good. If I want to take a little bit of a closer look at it, I can go ahead and click on the View button right here, and it's going to give me some detailed performance things. So, for example, right here, we're going to look at profits. It made $27,376 over 2 years. That's a return of about 273%. The annualized, that's about 138% year over year. Okay. If we would have bought and held for 2 years, we'd be down minus $55. So obviously having a trading strategy worked a little bit better than a buy and hold strategy here. Okay. Our total trades was 45. Okay. Total profitable trades was 35 with 10 losers. Okay. Our average profit was 1,000. So every time we traded, we could expect, and we had a winning trade, I guess is a good way to kind of frame that as well. We could expect about $1,000. Those trades varied from $5,000 to $75 in terms of profitability. Okay. Our most consecutive trades that we had in a row that won was 13 in a row. Okay. I don't care about that actually. I do care about our most consecutive losses. In this case, that's 3. Just because we're going back to discipline a little bit, but for me, it's a little bit harder to be disciplined if I'm losing money 13 times in a row, if that makes sense. Okay. In this case, on average, when we lost money, we lost $722. I'm going to kind of skip through some of these numbers, but I want you to know, when we used to print our help file for MetaStock, it was, as a manual, it was about 700 pages long. So I'm going to skip some of these numbers, but if you want to know what they do, just click on Help. It's going to tell you what all of them do. Okay. A couple of other ones that I will point out, though, is our buy and hold index. It was actually, because we would have lost money holding and we made money, we were 49,542% better. Our profit loss index, that's a measure of how much money we made on an open position versus how much money we lost on a closed position, was 78%. Okay, so obviously plus 100 is the best, minus 100 is the worst. 78 is really good. Reward risk measures the same thing, but it looks at open position. So that's our open position reward versus our open position risk. That was actually better. It was 91. Also goes from 100 to minus 100. Okay. The other thing I like to look at is equity. So if I look at over here at our equity graph, I can get an idea of how well this performed. It did okay. It did okay. And then for the last about year or so, it's actually done really, really well. So I get an idea of how well it's performed over time, if it's been consistent in that performance. The last year, it's been very, very solid. Okay. What I do like to look at is this is a very visual way to look at equity. And I'm sure most of you are the same. You don't, when you're actually trading, you want to kind of have a steady growth. We actually all want to have an insane amount of growth, let's be honest, but we don't want to have insane dips. We don't want to have a roller coaster. At least I don't. I'll go to the roller coaster if I want a roller coaster ride. That's not what I want to do when I'm trading. So this gives us an idea of how that works. Okay. So how do we kind of take that back to, how do we learn about this as a system, right? Because I do believe that you shouldn't use this as a way to skip your learning process. But what you should do is actually kind of use it as a way to kind of speed up what you're doing. So this is the system, this particular system that tested this well was called the stochastic RSI. And then the system that we worked on was the JNUC. I'm going to go ahead and plot this on a chart. And that'll allow me to pull up the symbol real quick. I'm going to go ahead and close this commentary for just kind of free up the chart. So let me go ahead and close this commentary window and close a couple of these charts behind here. And we'll just talk a little bit about what we're looking at. In particular here, you can see every time it bought, okay? This was trade 71. It was a short trade because it's pointing down. This is when we got out of trade 71, okay? This was a long trade. Oh, okay. Now I think that's actually that was trade 45, okay? This was trade 44. It was a long trade. This is when we got out of trade 44, okay? So you can see that on the chart exactly kind of where it would have bought in and got out. And that equity curve that we were looking at, you can see right here. You can see how that's doing. Now, if we kind of scrutinize this, we look at, let's say we want to learn the rules a little bit. I'm going to go back into that initial tool we started with, the Expert Advisor. I'm going to go and I'm going to find that stochastic RSI, okay? And right here, I'm going to attach that expert to the chart. I'm going to go ahead and click on close. And we actually had in gold today, Paul, we had a long position. It said get in a long position at the close. We've actually had a signal to go long. That's kind of funny. If we want to learn a little bit more about that trade, why it's giving us a signal, we can go in here and we can go over to the commentary. Okay. And since we have a buy signal today, it's going to say if we're trading short positions, we should get out of the short position. Okay. If we're trading long positions, you should, and I can make this actually a little bit bigger for you. If we're trading long positions, we can enter a long today with a market on the close order or at any market price on tomorrow's open. Here's where we learn a little bit about what this indicator does. Tushar Shanley and Stanley Kroll developed the stochastic RSI indicator. One of the problems with using the RSI as an overbought oversold indicator is that due to the built-in smoothing, it may take a long time before an extreme is ever reached. This forces it to miss out on many significant trading signals. Applying a stochastic process to the RSI, a stochastic RSI, makes it so that the extreme will have to be reached within a limited amount of time, preferably when a valid trading signal is present. As with the stochastic, the system trades around 20 and 80 extremes. As with all overbought, oversold indicators, even though it can be very good at capturing profits on a large number of trades, no real protection mechanism has been put in place if the trade moves against you. Stop loss orders should be used to prevent the few failing trades from removing all of the acquired profits. One of the things that if I had more than 4 minutes to show you, is you can actually go in, well, I'll just show you. We're going to go a minute or two extra. But if I wanted to go in and add a stop loss, because it's saying use a stop loss, my argument is, well, okay, what should we use? Well, we should test it, right? If I wanted to go in and add a stop loss to this system with MetaStock, I just come in, find the system, I right-click on it, go to edit. Okay, there's a whole stops tab. I can put in break-even stops, maximum loss, profit targets, inactivity stops, and trailing stops. So if I wanted to go in and test this with like a 5% or any of the other 50 something systems that are in MetaStock for that matter, if I wanted to go put in a trailing stop, all I have to do is go in, add a long one and a short one, and say I want it based on points percent. How easy is that? I'm going to not do that though. I don't want to make too many changes to the settings of this. It's not my machine. We'll go ahead and click on cancel. But that's how you would go back in and run that test with stops. Did you know it was that easy, Greg?
Yes.
Oh, all right, cool. I was hoping to show you something new today. All right. Last thing, real quick. Right now, we randomly came across, well, not randomly, Paul showed this to us, but we did find something that actually had a buy and sell signal. But one of the other things that's really a power tool of MetaStock, very, very helpful, is, there's unlimited opportunities that sit in the market. How do we find them? And if I decided that the stochastic RSI system was a system that I wanted to find a trade for today, and I didn't have one, I could come back into the Power Console. I could click on the scanner. Okay. And what I'm going to do is there's going to be a matching scan. Okay. It's going to be called PS stochastic RSI. I'm going to find that in here. Boom. Okay. We're going to run a signal scan for it. I'm going to run it against the S&P 500. I could run it against my pre-filtered list. I've made a list of optionable stocks. Actually, let's run it against that. Optional stocks that have more than a certain amount of volume to them, and they're above $5. I'm going to go ahead and run it against that list. Okay, so we're going to go through 2,096 stocks right now. Go ahead and run this. Let's go with the local instruments. Okay. Oh, somebody's been playing with this. Let me go to daily. Okay. And then I'm going to take this out too. Okay, let me go ahead and start this. Okay. It's going to go through those 2,096 stocks. You'll notice it's going through them very, very rapidly. It's removing about 85% of the ones that don't have an opportunity and allowing me to just have ones that have an opportunity. Now, I will tell you this is based on local data that I didn't update today. So these may not be buy and sell signals for today, but the idea is to just give you an idea of how this works. Okay. Wenlung says, I guess the best strategy for now is to go short. Maybe, but I certainly, right now, if you're not short already, I'd be looking for a bottom, Wang. I think they say the best time to buy is when there's blood on the streets, right? I don't know that there's necessarily that much blood yet. Certainly this is a 12% drop, and it's a very rapid drop, but we had a bigger drop for our inverted Santa Claus rally a couple years ago. But for now, for me, I don't think if you're not short already, if you're fortunate enough to get short, unless you're trading intraday and watching like real-time pricing, I would recommend this as a short time. For me, what I'm looking for is I'm looking for a sign of a bottom, because I think the best time to buy is when there's blood in the street. It's not my saying, but it's a saying that exists out there. And things are going on sale. But don't buy yet, because you don't want to catch that falling knife either, right? So what I'm looking for personally is I'm looking for a little bit of support to come in. I personally, not a recommendation, et cetera, et cetera, et cetera, but I personally feel, we've got a disease out there that is about as contagious as the influenza virus in terms of, but it is quite a bit more deadly. But it's still only like 3% deadly. So at some point, we're gonna, the fear is gonna kind of calm down, and we're gonna come back to a normal marketplace. At that point, it's gonna be an awesome time to buy, in my opinion. Okay, let's talk about MetaStock though. Okay, so we've got $250 a month. It's our real-time platform, and that includes the $1 billion data service that I was talking about, the Zenith service a little bit earlier. It also includes MetaStock, the software that's been rated #1 in its price category for the last 26 years in a row. Right, Greg? Yeah, 26 years in a row.
Yes. Yes.
It was hypothetical.
And you should point out that it's not $1 billion to purchase data.
I spend yeah. No. If you are willing to spend $1 billion to purchase it, we'll figure out a really good package for you, but it's only $250. That includes the software they invested $1 billion in, and it also includes the data, and it also includes MetaStock. Okay. In addition to that, we have an end-of-day version. It's $69 per month. The offer that we're going to do today is if you buy 1 month, we're going to give you 2 months for free. So, like if you do the end-of-day version, you can actually try what's been the best rated software powered by the best data out there for $70 a month. That's going to be about $23, $25 a month. Okay, that's it. Okay. If you want to try it with time, you're going to pay about $50 a month to try one of the software that's been rated #1 for the last 26 years in a row for $50 a month. It's well worth it. Okay, that'll include MetaStock, the latest version, 17. It'll include the data for whatever region you're most interested in. It's going to give you, we actually have what we call white glove installation support, where we will go in and we will help you install everything. We have you sit down with one of our reps. They'll help you get everything installed. They'll answer any questions that you have. It's a personalized one-on-one appointment just to make sure all of your questions are answered. And we'll also include the Unleash the Power of MetaStock that shows you kind of how to do everything in a little bit more of a specific manner than I showed it today. Also shows you some of our favorite built-in systems. Talks a lot more about the tools we didn't even cover, like the patented forecaster and like the option scope and those types of tools. Those are also, there's training built around that. So you can get all of that within 90 days. If you're not sure you want MetaStock, you can cancel. Most people don't. I was looking at, I don't think we've even taken a return on a MetaStock this month. That doesn't mean we haven't taken a cancellation, but nobody's actually taken advantage of our money back guarantee when it comes to MetaStock this month. At least when I was looking at the numbers, I believe that to be accurate. I should have double checked that. Anyway, if you'd like to sign up, 800, give us a call, 800-882-3040. Chat online with us at metastock.com/saleschat. We'd be happy to help you. And I hope you try it. I hope you enjoy it as much as I do. I hope it helps you make better trades. So that's all I've got. 1-800-882-3040. Any final thoughts, Greg?
No. I should probably apologize. We're working with new software on the back end, and I had a few audio glitches along the way. I popped in a little brass band while you were closing. That might have been odd for our listeners. We'll get used to it and get you a track by next week.
All right. Thanks for coming. Hope you enjoyed it. Hope you enjoyed the extra band. And we'll see you at the next one.